I'm bullish. I've been bullish for a while and it hasn't changed. So my thesis has not changed for a while, which was that the recession everybody is expecting is probably playing out, but it was priced in last year. Right, the markets don't go down 75% in crypto without it pricing in the economic cycle. The equity markets fell 35%, long end of tech fell 70%. So we had it priced in last year.
Raoul Pal, a prominent macroeconomic expert, remains optimistic despite the recent sharp decline in cryptocurrencies. During a recent appearance on Crypto Banter, Raoul conveyed a clear message to crypto investors: stay bullish. He cites several key factors contributing to his positive outlook. Firstly, inflation is on the decline. Secondly, unemployment rates are on the rise. And thirdly, the economy is showing signs of slowing down. These factors, according to Raoul, suggest that central banks may need to halt interest rate hikes and eventually resort to cutting rates. Moreover, he anticipates the possibility of quantitative easing, commonly known as money printing. When you combine these factors with the fact that 2024 is an election year, which often leads to increased stimulus measures, Raoul argues that this sets the stage for a perfect storm of liquidity, lower interest rates, and heightened stimulus. He believes this environment is conducive to the growth of Bitcoin and the cryptocurrency market. In the face of market volatility, Raoul advises maintaining a bullish stance, as he foresees potential rewards ahead. Additionally, in the video, Raoul shares insights on BlackRock and the potential impact of a Bitcoin ETF launch on Bitcoin prices.
So liquidity started picking up in June of last year, and that's when I started adding to my ETH bets into that big sell-off in ETH, where ETH made its low. Then the confirmation of my forward-looking indicators was that October was another, liquidity was rising, but the markets was having its last spasm. So again, I kind of added technology names as well, and was adding all the way through. So for me, looking forwards, we're now getting the bits that I've been waiting for. You see, I live in the future. I'm used forward-looking indicators. So they're looking at things in advance, the economic data in advance, kind of a glimpse into the future. But now that data's catching up, which is inflation is going down. Unemployment is slowly rising. The economy is slowing down. And that means the Fed soon stop raising rates. It means that eventually they cut rates and eventually maybe they use quantitative easing. We're also going into an election year. An election year tends to have stimulus because they want to get elected, so they bribe everybody with money. So we've got this kind of nexus of stimulus that's likely to come between the back end of this year, 2024, 2025. I've been working on something called the Everything Code as well, which I think I've spoken Banter audience about as well. And that's basically the idea that what the central banks are doing with quantitative easing is printing money to pay the interest on the debt from the previous kind of debt cycle. So every 3.5 years, same as the Bitcoin halving cycle, is this economic cycle driven by government debts and how they roll them every kind of 3.5 years, because they're all 3 to 5 year debts. We're about to come into the period where they have to monetize the pandemic payments, and they were massive. And they can't do it with interest rates where they are now. So what they're hoping is that they can get inflation to undershoot. They are not stupid, the central banks. They obviously know the forward-looking indicators are falling on everything, but they want an inflation undershoot because they need to be able to cut rates low enough that they can refi the debt and then put it onto the balance sheet. So that means, in layman's terms, starting from the back end of this year, the last quarter, let's call it kind of November, December period, there's going to be more cowbell. And cowbell is my kind of tagline for stimulus. That's whether it's the printing of money starts, or that starts then, or cutting of rates, because they need to be able to service the debt. There's $13 trillion of debts that come up for renewal, plus the new debt that they're issuing. So it's an enormous amount for the markets to digest, and the only way of doing it is this.
And
so that makes me...
They can't really refi. I mean, it would be crazy for them to start refinancing at rate at the highest that they've ever been, and maybe even getting higher.
So exactly, because it just means that they have to have issue more debt just to pay the interest. Now, what they have been doing, they have been issuing some of this debt, but they've been doing it like 3-month bills because they don't want to commit themselves to having to pay bloody 5% interest for 5 years. What they want to do is keep it the short term, let the economy collapse or let inflation collapse, cut rates, then they'll roll all the debt out 5 years, between 3, 4 and 5 years. So that's the game in town. They're all doing it, all the central banks. I think we're done. I think by November, inflation is going to be 2% or less.
Wow.
I think that they have no chance of continuing. So no, I think the data that's been coming out, as you've been pointing out, is very much telling the Fed that they're not going to do any more. And if that continues, which I strongly think it does, then that's game over. And in fact, we're going to be looking at rate cuts. Now, the thing that will accelerate rate cuts is the banks. If those regional banks start running into any banana skins and slipping up, then the game gets really interesting, because then they have to stop QT, they have to start rescuing banks, and then the real game is on.
Okay, so the US economy, you're saying, is actually very, very, very healthy. And given the fact that there's an election year next year, you think that they're going to make it healthier?
I don't think it's healthy. I think we're likely in a recession, and that will likely show up in the data from this quarter, next quarter. So we won't see it, but I think we've been in a recession for a while. And I think when it eventually gets called, it may have even started at the beginning of the year. And you get this kind of weird data prints, then revisions. So I think the recession's happening. I mean, find me somebody who hasn't been laying off staff. I don't know anybody. Well, because an ETF Bitcoin, as you say, this is just flow of money, right? What the XRP Ripple case is all about is really about the future of Web3.
Agree.
Which is a much bigger concept than just cryptocurrencies. It's about the integration of blockchain technology into everything that we do in a whole bunch of different business models. And, that's not clear yet, where that's going to come out, but it's coming out in favor of Web3 being the future and not everything as a bloody security, which is ludicrous. This is a red herring for people. They get confused. They think ETF equals instant capital, right? There's thousands of ETFs, and many of them have no capital. So what you actually need is an ETF and price action. If the price of Bitcoin is going up, what we all know is every RIA has looked at this. Everybody's had a conversation around the dinner table. All of these pension funds have done some work on it, but they all want price to go up first, because if not, they're like all of our friends who are sitting on the sidelines in cash, waiting for it to confirm. So let's say we get the confirmation in the next 2 months, whatever it is.
Okay.
I actually think it's going to be earlier, but what do I know? It doesn't really matter. But let's say my thesis is right, that by the back end of the year, we're starting to think about maybe the Fed have gone too far, how they're going to reverse this. How do we think about that? How's crypto trading then? Bullish. If you're launching an ETF and Bitcoin's at 40,000, you could probably get $10 billion into it for launching an ETF.
Yeah, $10 billion is a serious number in a market where they have to buy spot, because here you'll have $10 billion of buying pressure in the market.
That's right. So now if they launched it now, how much would it attract? Maybe $1 billion, maybe a couple of... Yeah, who knows, right? Had they launched it in October, how much money would it attracted? About zero. So you've got to have the mindset that people want it. If those two things happen around the same time, oh yeah, you'll see a ton of money coming in. But so it's not a one-off event. If it happened now, yes, crypto traders would trade it higher, but it's likely to actually fall back until actual demand. As you and I know, this space is suffering. The whole crypto economy is suffering from foreign direct investment. There's no new money coming in, right? We're just circulating the same old shit around and buying Pepes and then dumping this and then buying this. Right? There's no new money. So the moment we see the change of conditions, I mean, the Nasdaq's going to go to all-time highs soon.
Yeah,
but then people are starting to make money. And if they start making money, they start reinvesting money and the game begins. I think it's very important what BlackRock have done. Not for the ETF, not for the flows, but the message it sends to the entire financial industry. Again, I know a lot of these people. BlackRock have been involved in crypto for a while now. Because don't forget, he talked about it in the last cycle. Apollo, massive. Goldman, JP Morgan, they're all there. But what we're doing is seeing them come to the surface and say, this is a meaningful technology, and we will not only, before it's like we'll use blockchain for stuff, they're now saying, well, we want to invest in it, we want to allow our clients to invest in it, and we will build out on the infrastructure of it. So if you want the largest applications layer possible, it's that whole finance industry, right? There's like $1 quadrillion of derivatives. They can all go on chain.
Raoul Pal firmly believes that a perfect convergence of 3 significant factors will create the ideal conditions for crypto to flourish in the next 2 years. Given the current market volatility, it becomes imperative to seek guidance from seasoned experts like Raoul. His insights regarding BlackRock and the potential impact of a physically backed Bitcoin ETF on the market hold particular significance as we approach 2024. The evolving landscape promises to keep both crypto enthusiasts and investors vigilant and engaged. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.